Good morning, everyone, and welcome to the Money Control live stream. You're watching Markets with Santo and CJ. Well, it looks like another red morning on the last street, even though it is quite pleasant here in Bombay after a very, very long time, Santo, as you have ascertained to me,
It
earlier
was so
today.
nice to see the sunlight after such a long time.
Definitely, that is
CJ, it
true.
really lifted my spirits, I would say.
Absolutely. But before we move on to looking at how the trade setup is, we need to talk about the sector that will probably be the talk of the town today, and that is the information technology space. Accenture, one of the biggest companies out there in the IT services sector, they have come out with their earnings for Q4. Their earnings usually go from October to September, so therefore the September quarter is usually the fourth quarter for them. And while yes, Santo, the numbers were largely in line with what the consensus estimate was, and there has been a bit of a moderation as far as growth is concerned. I think what Indian IT companies could take heart from the fact that the guidance that they have given for FY23 for the coming financial year, that has been largely above what the market was expecting. They've guided for about 8 to 11% growth in sales in constant currency terms in the next financial year, largely on the back of what has been a very, very strong booking period for the company. If you look at the Q4 alone, Santo, they've booked deals worth $18.4 billion in just one quarter, which goes to show to me that the demand pipeline and demand at this point of time is still quite robust, even though some people have been raising question marks whether this will sustain going into 2023 because of the fear of what recession and all. I think if you look at the IT space right now, there has been a meaningful correction, and some of that in individual stocks may have been over the top because investors feel are maybe correlating everything to how it was in the past, that in IT services, why would somebody want to keep spending on IT services when revenues are falling, and therefore clients will cut back on spending. But I think the nature of the industry itself has changed, as I have been talking about in the past as well, and therefore demand could be much more sticky than it has been in the past.
Well, if you look at IT stocks themselves, probably I think they appear to have bottomed out for the time being. They have fallen quite steeply, and for the time being, at least, most of the negatives appear to have been priced in. But that said, now the issue is, will the stocks really outperform in a big way, or will they give meaningful gains from these levels? That's the question, and I'm not pretty sure of that, given the way the demand situation is likely to play out. And as I've said in the past also, FY23 is not really the problem for IT companies because the pipeline is pretty robust for now. It is how things will start playing out from next year. Now, if one were to look at the Accenture numbers, since they follow a October to September cycle, probably it could still mean that even the second half of for Accenture, which means the first half of the next fiscal for IT companies, at least there seems to be some visibility on the spending part. That is what, if one were to go by Accenture's numbers. So maybe that could result in some of the pessimism over IT stocks receding for the time being. But will that change in a big way towards being overweight, like the kind of run that we saw in the last couple of years? That is what I'm a little skeptical about. CJ.
I think there are two things here. One is, of course, you talked about the correction part, and I think clearly there was at one point of time too much optimism around the sector, and the sector clearly in last 2021, last year, it was the leader of the bull market, at least when you talk about the large cap space. Yes, going ahead, it may not be the leader. Probably because if you look at the banking space, I think the valuation comfort there is much more, and therefore the upside is much more there, and you could expect that the banking space could be the next leader if we were to see a new run up in the market. But I think even if it were not to be a leader, it will still give you decent returns if you were to look at it from a 2 to 3 year perspective. And secondly, I think the fact that a lot of people have been talking about the demand slowdown. I think going ahead, we will have to wait and see if, in the September quarter earnings how the commentary is. Because let's not forget that FPIs were actually buyers of IT stocks in August. They have been among the biggest sellers. I mean, if you look at the 9-month selling, IT and bank were the two biggest sectors that saw the
So probably see the IT selling also could have to, the buying by FPIs could also perhaps have to do with the fact that they may have been the first ones to get out of that sector, and probably at lower levels the price does seem to make sense.
So that is my point. I think there could be a tactical play here. If you were to look at it, yes, I mean from longer term perspective, IT always has been a good story in India, not only because you get capital appreciation, but you also get steady earnings and steady dividends as well. So that is also an attractive part of investing in IT. But I think from a tactical point of view also, given that valuations have been reset so much, there is a possibility that in the next 6 to 12 months, you could see some bit of upside going ahead.
Well, that's it. Let's move into the market setup, CJ.
Yes, Santo, and it is a red day, as I said earlier today. The HX Nifty 50 Nifty futures are indicating a weak start, almost a 80 to 100 point cut on the Nifty this morning. And Wall Street yesterday, of course, fell again. Second successive day of losses after the US Fed's rate hike and of course the commentary around it. Plus, let's not forget that the situation in Europe with respect to Russia and Ukraine also seems to be a little dicey these days. So we will have to wait and see. There are a lot of uncertainties, and when there is uncertainty in the world, there is only one place to hide, and that is the US dollar. And the US dollar, although it did come off, intraday towards the 110.4, 110.5 levels, it ultimately closed the day above 111. So clearly, with the dollar's strength the way it is, emerging market economies will still remain under the lens. You can already see the mayhem it is causing in the foreign currency market all over. You talk about the yuan, you talk about the yen, and you talk about the rupee. We will have to wait and see whether the rupee, probably takes some support after hitting a record low yesterday, or do we see another bout of selling there?
Well, again, yesterday the huge FI net selling figure put
2,500 plus.
I think a little unsettling, given that the market had managed to make a good recovery. So there is no consistency in FPI flows. At least that is what seems to be evident from the way the trend has been over the last couple of weeks. Again, you mentioned the rupee bit. That is clearly a concern at this point in time. And given the way the markets globally have been moving, I think some bit of hot money could exit India in the short. We can't rule that out, but that's the very nature of the flows. And here on, now given that we are not too far from the earnings season, maybe we could see activity getting a little stock specific.
Possibly, Santo. And talking of stocks, let's quickly move on to some of the stocks that will be on our radar today. And starting off with one from the Tata.
Yes, TRF. Now, the Tata Group has decided to merge many of its subsidiaries into itself, and TRF is one of the stock. Now, TRF has a very interesting history here, CJ. Back in 2006, during the bull market of 2007-8, this was one of the best performers. Now, the stock was quoting around 100 rupees in Jan of 2006, and by 2008, it had gone to 1,000 rupees.
Wow.
Okay. A 10 bagger in 2 years.
Right.
Then came the meltdown, and by March 9, the stock was down below 100 rupees. Okay. And March 2009,
right.
April 2009, this 1 year later, the stock was back to 1100 rupees. So that's the kind of, it became a 10, it was a 10 bagger in those
twice
years.
In 5 years.
Yeah, in twice. But since then, it's been a one-sided downtrend.
Yeah.
Now, coming back to the present, just 2 or 3 weeks back, a month back, there was a sudden burst of activity here, and the volumes and the price movement just seems to show that at least a section of the market would have known that something was in the offing, but it turned out to be a very bad bet if you look at the merger ratio. Now, the swap ratio is that you get 17 shares of Tata Steel for every 10 shares of TRF.
Okay.
Now, that really doesn't help. TRF is at 375 rupees, which means that for 3,750 rupees worth of TRF shares, you are just getting 1,700.
Wow, that's half, less than half.
Unless Tata Steel prices double from here, the guys who bet on TRF over the last month or so, they're not going to make any money, and you could see a sharp correction in the stock today.
Yes,
interestingly, if you look at the other Tata stocks, Tata Steel Tata Steel long products, that stock too saw some bit of activity, and probably there is reason to suspect that somebody knew something was coming, but the difference
they
is
always
not
know,
very wide. In two other stocks, which is Tata Tinplate and Tata Metallic, the prices have not really moved at all. But TRF is clearly one place where I think the market had a whiff of something coming. Nothing else can explain that kind of buying, given that you're not seeing any meaningful improvement in the company's fundamentals over the last many quarters. So here is something I think some traders try to be clever by half, and they're going to pay a price for it.
Well, clearly, Santo, I think that clearly a googly has been thrown by the Tata Group on TRF shareholders. But I think, of course, if I were to just stretch the argument, I think one justification could be that given that it's part of the industrial group, there has been recently a lot of chatter about capex themes, and capital goods stocks in general have found fancy with investors. So possibly some part of it might be explained by that, but clearly people who were trying to be clever have been shortchanged here. And I think overall, but if you take out the merger ratio, but I think overall, if you're a TRF investor, you're getting a Tata Steel stock, even if you're getting it probably at a disadvantage. I think from a long-term perspective, it might actually play out in your favor, because clearly with the capex cycle now starting in India, already underway in India, you would expect a metals leader such as Tata Steel to be probably at the forefront of the companies that will benefit from it. So I think, yes, in the short term, if you were a tactical player, you were a short-term trader, you probably are taking it one on the chin. But if you are a long-term investor, you might end up being in the on the winning side in the long term, because of getting Tata Steel shares, which are generally quite good, quite a good bet. Now that also with debt levels coming down, hopefully dividend going ahead would remain at the same level at least. And a lot of analysts are also saying that Tata Steel's earnings, even if they don't appreciate too much, they are not going to depreciate a lot from here on, and they likely will maintain the current earnings level. So that, I think, should provide some comfort to TRF shareholders, Santo. Well, the next stock on my radar today is one stock that you were quite bullish on, Santo, not so long ago. That is M&M Financial. Now, yes, fundamentals have clearly improved for the stock, but today the stock is likely to come under pressure because the RBI yesterday came out with a notification which effectively just has banned the company for a certain period of time from utilizing third-party recovery agents. Now, this has come on the back of certain unfortunate news items that had come out in the media recently, and I think I don't need to mention them. Everybody knows about them. But I think clearly this has been one issue that has been plaguing the financial services industry, Santo. And I'm really, in a way, really happy to see the RBI clearly has come out with a strong action. Also, this sends the message across to everybody, as we know that fintech companies had also been come under the lens because of the recovery practices that they were utilizing in terms of loan collection. But I think for M&M Financial, going ahead, this could really raise questions about loan collection efficiency, because that had only started to recover post-pandemic, because pandemic had really affected loan collections for a lot of NBFCs. Now, with the third-party agent now gone, whether that will suffer, that metric will suffer. The company, by the way, has been allowed to recover loans on its own or through its own agents, but they cannot outsource that job to anybody else for the time being, and RBI has not provided any timeline as to till when this ban is applicable. So I think for me, Santo, given the sharp run-up that the stock has seen, and you talked about it earlier as well, I think there is a possibility that going ahead, you could see some bit of consolidation, given that this news item could be an overhang going ahead.
Well, it would, CJ, I think to some extent it will be a dampener, and it will also affect the collection efficiency of M&M in the short term. But the simple argument I would make at this point is that there are other positive. One is that the overall improvement in asset quality, and today even borrowers are a bit cautious. They know that if they default on loans because of agencies like CIBIL and other agencies which keep track of their credit score, it is very difficult for them to get the next loan. That is something that is very clear, and which is why if you think this will lead to a large scale default where people just don't pay up, I think that's a little unlikely, but on the margins definitely this could be a dampener. Next stock on our watch list is Hindustan Zinc. The stock has been sideways for some time now. The one positive development for this company is that some of the smelters in Europe have been closing because of high cost of operation, because of rising energy prices. But at the same time, CJ, that's been balanced by the fact that zinc prices have come off sharply over the last 1 month, from about $3,600 per ton to about $3,100 in a space of 1 month, which indicates that demand is quite weak. So, supply is likely to remain tight, but at the same time demand is also showing signs of lagging, and according to Antique, the stock is fairly valued at current levels and it has a hold rating on the stock.
Well, Santo, clearly demand has been one concern, and that is why you have seen zinc prices internationally come down quite a bit after that rally back in March and April when the Russia-Ukraine issue had cropped up. But I think recently there has been a decent revival in zinc prices, and probably the view is that if supply were to be constrained more than the current level of demand, then clearly there is an argument that zinc prices should go up going ahead. Also, in the short term, prices could also move much higher because of the fact that a lot of people who have shorted zinc futures in the international markets and over the past few months would be forced to cover up if inventory levels at LME or with CME continue to fall. That said, let's quickly now look at the market check first. It's clearly been a weak start for the market, but although not that weak, the Nifty only down about 32 points at this point of time. If you look at the Sensex, I think Sensex is down about 132, 133 points at this point of time, but the mid-cap space is holding up quite well. The Nifty Mid Cap 100 higher by 0.1%, Santo.
Well, and Tata Steel shares are up in early trade. They're up about 2% on news that it's planning to merge about 5 of its steel making subsidiaries with itself. HDFC Bank under pressure, down about 1%. And as you mentioned, CJ, the mid-cap space is still pretty strong. 1,300 stocks up and less than 500 stocks down.
And I think, Santo, if you look at the IT space, I think clearly if we can bring up the chart of the Nifty IT, I think the Nifty IT has started off on a weak footing at this point of time. Nifty IT is, I think, down about 0.3% at this point of time. So clearly not that bad a start given the sort of commentary that was coming out from brokerages such as Nomura and others. The Nifty IT index is right now down about 0.1%. So overall, a muted start, Santo. I think that is how we can probably categorize it. That said, coming back to Hindustan Zinc, you know, Santo, the interesting thing that I noticed was on the RSI chart of Hindustan Zinc, and I think there seems to be some bit of a reversal in trend. Yet it is yet to be confirmed whether that is a bullish reversal or not, and whether it will sustain or not. But clearly, in the short term, if you're a short-term trader, this is one stock that could remain in action going ahead. Also, from an investor's point of view, the high dividend play on the stock is something that a lot of investors, tend to like, given the fact that Hindustan Zinc has been offering very high level of dividend. And I think that in a market like this, you would generally want to have some dividend plays on your portfolio. And I think that is where Hindustan Zinc could benefit.
Well, the last stock,
yes, sir. Last stock on my radar today is Sobha. Well, this is largely a technical pick because if you look at the chart of the stock recently, it had broken above the 50-day exponential moving average, Santo, of about rupees 680, and that is indicating that there is more upside to be had. At this point of time, the stock is somewhere around 689 rupees. So clearly, it seems like early days of a new bullish trend on the stock. If you look at the RSI chart as well, there has been a bullish reversal there, and that is clearly giving a buy signal according to a lot of technical analysts. Prabhudas Leeladhar, which has also come out with a note on the stock, they believe that the stock could offer about a 10% upside in the coming 2 months, with a target around somewhere around 750 or 760 odd rupees. So clearly, from a short-term perspective for traders out there, this will be one stock to keep an eye out on.
CJ, my simple argument against Sobha at this point in time is that its fortunes are closely linked to the performance of the IT sector. Bangalore is its major market. The way IT sector does also has bearing implications for the demand for its projects. And right now, the outlook on IT in general is a bit hazy. You're hearing of companies taking a very strict stance against employees found moonlighting. And besides, they've also indicated that attrition levels are likely to go down, which means that it will be less lucrative now for
probably wage hikes will not be as
great as so those are just a couple of things. Last stock on our watch list this morning is Mahindra and Mahindra. The stock again has been one of the strong performers in the auto segment, and brokerages tracking the field. This stock give 2 or 3 simple arguments in favor of Mahindra and Mahindra. One is that the successful recent launches, its electric vehicle foray, and now the XUV 400, which it's launched, is also supposed to be getting a good response, and it is one in the affordable segment right now and taking on the likes of Tata's Nexon. So this is something that is in favor of M&M at this point in time. Besides that, you have the company managing to improve its market share in the tractor segment as well. So all in all, things looking pretty good for M&M at this point.
Well, Santo, clearly it is riding the demand wave in the SUV segment at this point of time. You talk about Thar, you talk about Scorpio, you talk about XUV 400. All of those products have recently been a huge success for M&M, and the company also in its commentary has been very, very bullish on the automotive side. But I think the tractor side is something there where there still remains to be a little bit of uncertainty. Recently, there has been commentary that demand has been slowing down, or has, at the retail level, not been picking up that much. So it will be very interesting to see how the festive period pans out for a company like M&M, and also, of course, Escorts is one of his rival. M&M has managed to win back a lot of the market share that it had lost between the 2020 and 2021 period over the last couple of quarters. But going ahead, whether demand in the tractor business sustains or not, that will be very crucial, because tractor still contributes a large chunk of revenues for M&M, and I think that is something that I will want to keep an eye out on going ahead.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading day.